Dinshaw Irani joins us. Time to say good morning to a bright and a evergreen man who's always smiling. Good morning.
Morning, Nikunj. It's a lovely day.
Depends on where you're staying in Bombay, sir. If you're close to your office, it's a lovely day. But trust me, you have to travel more than 1 hour in Mumbai traffic on these roads. Monsoon is never lovely then. So I don't know how far do you stay from office, but looks like you stay close because early morning, if you're finding it lovely, that means you don't have to commute a lot.
Yeah, you asked me that last time too, so I gave that off. But anyway, I stay close by. So
And I think that's the state for the market. Depending on whom you're asking, you're getting a different question, different answer, right? I mean, it's a market where selective gains, I think, are visible. If you're into banks, it's great. But if you bought IT, it's turning out to be a terrible year.
very true. And I don't think that pain has gone away. Nikunj, somehow the market is still getting fooled by the fact that they saw these numbers and they're hoping that US will see a cut down the year as such. But I don't think that's going to happen. In fact, if anything, inflation is again rearing its head globally, not only in India, but also in the US. I mean, you've seen the numbers of their property prices moving up slightly. Their unemployment rate still remains low. It's very sticky at that bottom levels as such. So they're having a problem there. So I don't think that's going to go away. And frankly, I mean, IT itself, if you look at the valuations again, I don't think they're exciting enough for anybody to get in. They're still at a premium to the pre-COVID levels, while the growth rates are supposed to be lower than the pre-COVID levels. Not only for FY24, in fact, I believe even for FY25 they'll be that. So that's a hope trade being worked out, but I don't think it's going to work.
What's next for the market? Because market returns have been more than satisfactory. Earnings season has been good. I mean, every large cap company has given you one trigger or maybe two triggers. Reliance is giving you a free share. ITC is giving you the demerged entity of the hotel. L&T is doing a buyback. Tata Motor is buying back DVR. I mean, I'm just amazed with what large cap companies are doing to create shareholder value.
No, very true, Nikhil. So the point is that even if you look at where the market has been, I mean, year to date, maybe it's up some 7-8 odd%. But the point is that even if you go back to the October highs of 21, I mean, October 21 highs, we are only 8%, 7-8% higher from those levels. And if you convert to dollars, we are in fact negative probably because the dollar, I think, would have appreciated some 10 odd% against the INR from those levels as such. So frankly, I mean, our market hasn't gone anywhere. And these are the triggers that one looks for. And the quarter numbers that you mentioned, they've been a mixed bag. It's not been very exciting in certain segments. IT was one obvious one. Consumption is another space where it's been a mixed bag actually, and not been that much of a push. On valuation terms, the markets are fairly at probably at the levels which average levels of the last 6-7 years. I mean, if you go back and look at 20 years, obviously we are at a massive premium. So there are these pockets which should do well. And our feel is that it's mainly going to be driven by financials and consumption. Again, consumption, we're talking about discretionary here, because if you're talking about GDP per capita, GDP moving up beyond $2,500 at some point in time, obviously you're talking about discretionary picking up in a big way. So that's what we are more gung-ho about. There'll be obviously blips in the market, which is where the buying opportunities come by.
Sure, but within financials itself, which is the pocket that you're looking at? Because it's become very, very diverse, right? Right from private, public banks, the mid-tier banks, then there are these housing finance companies, commercial vehicle players, the financiers, etc. Which is that pocket? And even now the microfinances and lenders, the likes of 5-star, Spandana Spurti, etc., they have been seeing a massive re-rating in terms of their earnings. Which is the pocket that you are incrementally looking at positively now?
So basically, within financials, we've always been gung-ho on banks. In fact, private sector, consumer-facing banks is what we have been pretty bullish on. In fact, we have the largest PSU bank also, which is more of a consumer bank today than actually a corporate lender. So that's one area which is obvious. We've also, since we exhausted the number of stocks in this space, we've gone slightly below that level also to mid-cap and banks also, and seen the asset quality, and we've got a couple of them there also. So that's one space. And NBFCs, you name it. I mean, you name it and we have it. We've got CV lenders, we got mortgage companies, And so I think that's the space, because you need to get into a space which is financiers of consumption. Yeah. So that's one. When plus that's NBFC part. The bank have a double whammy, because they're not only going to finance the consumption, but they're also going to finance the capex needed to fuel that consumption. So it's obvious that they'll have a double whammy going forward. So that's why we are more or less totally overweight in these this particular sector. Financials.
Curious to know, Dinshaw, what's the total portfolio allocation then to financials, given that you're so positive, including the banks and the NBFCs, etc.? And secondly, the other thing that you pointed out, it's getting difficult to deploy money. Is that a real challenge now?
No, not really. So financials is around 44-45% of our portfolio today. That's fairly huge as compared to what the index is. Plus, I said that we're going down the level because the large cap banks, we mostly have the guys who really appeal to us, right? We'll have certain large caps which are not there in our portfolio, but that's why I said that we're going down that level. But there's enough in the market. In fact, I think mid cap, small cap space, specifically small cap space, is fairly exciting. In fact, Liquid was saying that small cap is doing well. Has been that particular index has been fairly doing well. But the point is that small caps is like a C, because anything beyond 250, the top 250 is small cap. And that's why you have enough potential there. And in fact, if you're talking about GDP pickup happening, by the way, India will be probably the only economy after China which will give this kind of an option to the world to get into a growth phase. And we will be crossing 5 trillion by 27 or so, whatever. So that's what the excitement is. And if that is going to happen, it's going to be the MSMEs which are going to contribute in a big way. And obviously, MSMEs, we're talking about the mid cap, small cap space.
Okay, so what have you bought in the small cap space? I'm curious.
I won't give you names, Nikhil, but we bought some NBFCs in that space. I mean, it's in the mid cap and space rather. In the small caps, we've looked at consumption stocks, certain I wouldn't say infra plays, but it's more of a cap goods space and stuff like that. So we've been selectively buying out there. In fact, we've kept aside around 20% for beyond financials and consumption that has to be deployed in that space. So
give us a hint. It's like saying I bought one construction stock, one consumption stock. Is like saying I'm bullish on India. Give us a hint.
No, I won't give you any hint here because we're still building up positions. So I'll leave it here. So that way. But what you're showing on the screen is not what we bought. Not the MNCs. We've not gone into those. Yeah.
What is the future for the expensive capital goods
stocks?
Should we
keep eliminating by showing one stock and then just saying no, it's not?
Yeah, let's do it. Yeah, it's a great idea. Shouldn't we start? Aman, why don't you start?
No, I know you don't.
Next stock, Siemens.
No, he's saying not the MNC, so that's our Thermax. Is that the one? Crompton, Cummins, should we keep coming out with all of those?
It's never going to come on our channel again, I think. But to make sure that you stay, I'll ask you something that you're quite familiar with. And, you've spoken a lot about new age tech companies. And given the fact that a lot of them have had their best quarter since they have listed over the last couple of years, what's your outlook? Do you think from the elevated IPO levels, the fact that they are now available at, a cheaper price, that there is more lucrative opportunity, so many IPOs as well that have hit the market?
So, Aman, the point is that longer term, these stories will play out perfectly. In fact, the new age companies that we own as such. But so, as I've said earlier also on your channel, what do you look for in a platform? Basically, these are all platform companies. They offer a platform which gives you convenience. Is that an option of converting? I mean, caching that convenience? Yes, right. If there is, are there enough users for this convenience? Yes. But is it easily replicable? I think that is the last question that you need to answer, which has to go in the negative rather than the affirmative. If that is the case, then you want to own that company, and that's why we believe that the ones which we own are fairly non-replicable as such, and we've seen that in global trends also. The first mover advantage is definitely there in these kind of plays. But we are also saying the fact that valuations at some point in time become screaming. I mean, as in not, rather it's fairly overvalued and stuff. So we'll be very cautious at those levels. We've actually trimmed in certain names, but we're waiting for some time correction to happen before we go and pick those names again. Be very clear about the long-term potential of these stocks and such, and we'll probably do that.
Dinshaw, are you getting a bit of a FOMO feeling when you look at pharma? Because if I have it right in the list of stocks that you have looked at or at least held at one point of time, there's one name, Laurus Labs, but I don't see any other.
So no, we're not feeling any FOMO out here because in fact, I don't know. I think most of you guys missed out. One of the majors had filed a K6 in US, who's listed in the US as such, who's operating out of US, and is an Indian major. The kind of price erosion that he's seen in that quarter has been really screaming as such. So it's obvious that the competition hasn't gone away in the US. So to what you need to look at in pharma probably are those who can replace their pipeline. And I don't see that. We haven't seen that in any of the players who can replace their quarterly pipelines at 10% kind of depreciation levels. Right? So that's why we are staying away from those. However, we're looking at domestic plays. We want to get into pharma domestic plays because, as I said, that if your per capita are going to move up, obviously health spends are also going to move up, and that's one space that we are actively looking out for. Unfortunately, most of the stocks are fairly expensive, but we're still trying to dig into some.
There is FOMO in Jomo at the same time. Jomo because he's not bought IT, he sold out of IT. FOMO maybe if there is no pharma. But Dinshaw, I'll talk about a big trend, which is consumption, which everybody is gung on. But I'm going to just throw some data, which is look at the volume growth which a Nestle has reported, what HUL is indicating. Auto dispatch numbers, okay, SUVs are selling more, but sedans are not selling. The passenger car market is growing only at 4%, below the GDP of country. You have two-wheelers which are contracting. So what is happening in the consumption space? HUL is in trouble. Cars are selling but very niche in terms of SUV, and two-wheelers, which is the bottom of the pyramid, is just not selling at all.
Okay, first, let me tell you, there's never a FOMO for us because there's always any one stock that you lose, there are hundreds in the market which you can get into, right? So there's always a big sea to dip into as such. Coming to consumption space per se, the point is that it's mainly, I think, premiums which is selling. I mean, you yourself mentioned that in even the car space, it's SUVs which are selling more. If you even go and look at any other space, in fact, I highlighted this earlier on your channel that globally that is a trend. Right? I mean, so basically you're looking at so I will not look at a Nestle or a Lever because they're FMCG guys. I mean, I don't think I would. Just because you're earning more, you'll go and take a bath 3 times a day or brush your teeth 4 times a day. So that's why they'll never make it to our portfolio. And obviously, if they make it, they have to have some valuations to appeal to their single-digit kind of growth rates that they've always shown as such. So it's mainly going to be these discretionary spends, which are aspirational discretionary spends that will probably make it to our portfolio. And that's what we've been holding for a while. But again, as I said, that in certain cases, the valuations have really shot up and we've been trimming those names there also, and that's why some amount of profit we've taken off the table. We have not made those stocks zero, but obviously we're waiting for some correction to build in such before picking them.
All right. Dinshaw, good to have you on board. I was going to ask you not JOMO, FOMO, but maybe YOLO, the stock that you buy because you only live once, but we'll save that for another time. Good to have you on board as always, and thanks so much for sharing with us your outlook on the markets.